Let's talk about expenses deductible when working from home. So here's an overview I want you to pay attention to. So employees who work from home can no longer claim tax deductions for their unreimbursed employee expenses or home office costs on their federal tax return. If you remember, a couple of years ago, until the 2018 tax reform, employees could claim those expenses as an itemized deduction. But since the TCJA Act passed, those deductions are gone. Now, self-employed workers can claim eligible deductions for business expenses and for working out of a home office. And you can actually choose the two methods for calculating your business use of home tax deductions. So you have the simplified option, or you have the direct method option. I'll actually explain each option pretty quickly when I go into this conversation. So bottom line here is that if you listen to me right now, you cannot claim home tax deductions if you are an employee. You can no longer do those. And the thing is that, people talk about, well, even during COVID, there were some special some special provisions in the tax law and the revenue code that allowed that. But now we are past COVID, and nowadays you cannot claim those deductions. Now let's talk about self-employed individuals. So if you're a self-employed individual, you need to understand that the IRS requires these expenses to be used exclusively for your home self-employed business. This is very important because the IRS wants to make sure that you are using your home office strictly for your business, okay? And so one thing I want to say here is that to claim a home office as a business expense, you must use part of a home as your principal place of business, or a place where you regularly meet, greeting clients or customers, or store inventory. And if your home office is a separate structure, then it doesn't have to be your principal place of business, okay? And so, but the thing here is that the IRS is just trying to make sure that the place that you want to dedicate for business is indeed for business and strictly and exclusively for business. It could be a portion of the house, it can be the whole house, it can be an office, it can be the basement, it can be your kitchen, whatever it is. But when you dedicated this place for office, it has to be for business. This is so important. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let me give you a few pro tips here. So the first tax tip is that you have to deduct home office expenses if you only worked for yourself or work for yourself in addition to a W-2 job. So many employees work from home because it's convenient for their employer. For example, a salesperson who lives in a different state than company headquarters may work from home rather than the company paying for office space. If you only worked as an employee during the tax year, you can't typically claim home office expenses related to your work. If, however, you worked for yourself in some capacity, you might be able to deduct home office expenses. And if your home office is used exclusively and regularly for your self-employment, you may be able to deduct a portion of your home-related expenses, such as mortgage interest, property taxes, homeowners insurance, and utilities. And you do not have to meet the exclusive use test if you claim the deduction for using your home as a daycare facility. So that's tax tip number one. Tax tip number two, you want to actually keep thorough records and save receipts. So you need to keep accurate records of any expenses you claim as a deduction. And the IRS recommends keeping a written record or logbook in the event any questions arise about your deductions. And so you should also save proof of payments for any tax-related expenditures. And this proof may be in the form of a credit card or bank statements, canceled check, or itemized receipt. And if you paid in cash, the receipt should include the payee's name, the date of the payment, and the amount. And digital records will usually satisfy these requirements as long as you can retrieve them when needed. So this is really important. Now, what I want to say here is that you want to keep copies of all tax-related items and documents for at least 3 years. And so this includes receipts, invoices, tax forms, and any other supporting documentation. And the bottom line here is that you got to really ask yourself, if the IRS were to come and knock on my door, would I be ready? Because see, the burden of proof is really on you. It's up to you to actually substantiate your expenses. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about expenses that are tax deductible when working from home. Okay. Tax tip number 3. You want to consider the simplified home office deduction to ease your record keeping. See, the whole thing is you want to really think about the long term, and in the long run, you want to be able to ease the whole record keeping. Okay. So when eligible to claim the home office deduction on your taxes, you have 2 ways of claiming the deduction. As I said before, the simplified method and the direct method. The simplified method is just that. It's very simple. You can use this method to determine your home office deduction on your return by expensing $5 per square foot of your office up to $300 square feet for a maximum of $1,500. So that's option number 1. Option number 2, that's called the direct method, is more involved but could result in a bigger deduction. But this means that you're going to have to actually you have to really sort of beef up your record keeping strategy. So tax tip number 4, you want to consider taking the direct method if it provides a bigger deduction. Okay, so the other way to claim the home office deduction is by using the direct method. So this involves tracking all of your home office expenses in addition to any cost related to repairing and maintaining the space. Further, you can claim deductions for a portion of other expenses based on the proportion of the space to the rest of your residence. What about tax tip number 5? So each year you can switch between the simplified and direct method to make the biggest tax deduction. It's totally up to you. The IRS is not, it's really flexible. Rather, the IRS is very flexible when it comes to the switching. So you can switch on and off. So to get the biggest deduction possible, you may need to calculate your deduction using both the direct and simplified methods to see which one comes out ahead for your taxes. Okay, so you don't need any reason to switch from one method to the other year to year. So this is kind of cool. So usually the IRS is more sort of rigid, it's stricter when it comes to tax elections, but when it comes to the home office deduction, the agency is pretty flexible, and we appreciate that. This is just fantastic. So avail yourself of that sort of possibility, and so you want to see which one works for you every single year. Now let me give you a few steps here. So how do you calculate your home office deduction as a self-employed person? Let's have a conversation about that. Now, calculating the home office deduction under the simplified method is straightforward, right? You just take the square footage of your home office used exclusively for your self-employed business, and you multiply it by $5 per square foot up to a maximum of $1,500 per year. So we're talking about 300 square feet. So the direct method, by comparison, requires more work on your part throughout the year and when preparing your return, but it may also save you more on your taxes. And so when we talk about the direct method, we're talking about a method that determines the home office tax deduction based on the percentage of your home office square footage for to your entire home. What I'm trying to say here is that you are basically you got to be good a little bit at math, geometry, if you will. And so you want to divide the square footage of your home office by the square footage of your entire living space to calculate the percentage of your home that is dedicated to your home office. And this percentage is then applied to your home expenses to actually determine what amount might be a business expense. And the cool thing here is that you can claim a percentage of expenses such as rent, mortgage interest, utilities, insurance, and repairs. Depreciation is also an allowable expense for a home that you own. You got to own the home. If you do not own the home, you cannot actually you cannot allocate a proportion of your depreciation. For example, if your office is 250 square feet and your home is 1,000 square feet, you would deduct 25% of your allowable expenses. This is 250 divided by 1,000, which is equal to 0.25 times 100. So if you had $10,000 in eligible home-related expenses, you could claim up to $2,500 in deductions. The direct method has no maximum deduction limit, making it more attractive in some instances than the simplified method. You may actually consider calculating both methods to help determine which method is best for your situation. Again, you have the ability, you have the flexibility to switch on and off based on the year, okay? So when using the direct method, you also need to account for depreciation of a portion of the house if you own it. You don't need to worry about calculating this when using the simplified method for taking the home office tax deduction. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about expenses that are tax deductible when working from home. Let's quickly talk about something that you would be really interested in. Can you use the same space for your W-2 job and side gig and still claim the deduction? Well, it really depends. If you use your home office for your W-2 job and your side gigs, you will not be able to claim your home office as a tax deduction. It really depends upon specific situations, but you're going to have to provide a lot of proof though. The IRS allows you to deduct expenses for having a dedicated space where you regularly and exclusively conduct your self-employed business. This is true whether you live in a house, apartment, condo, mobile home, or boat, as well as external structures like a barn, garage, or workshop. If you have separate spaces for your employee job and for your self-employment work, then the eligible expenses for your self-employment space can still be deductible, even though the expenses for your employee space is not. So you might have the best of both worlds in some situation. Well, one option for employees who must pay for business expenses related to working at home is to seek reimbursement from your employer. So reimbursement are typically tax-free as long as your employer has an accountable plan. This means what? It means that they require you to submit an expense report or some other means of accounting for your expenses. And so being reimbursed for an expense is almost always better than taking a deduction for the same expense on your taxes. Okay, so those are things you need to think about. So bottom line here is that for you to actually qualify for the home office tax deduction, think about those two things. You must meet one of these criteria: the exclusive and regular use. So you must use a portion of your house, apartment, condo, mobile home, boat, or similar structure for your business on a regular basis. This also includes what? Structures on your property, such as an unattached studio, barn, greenhouse, or garage. It doesn't include any part of a taxpayer's property used exclusively as a hotel, motel, inn, or similar business. And also you have to think about the principal place of business. So your home office must be either the principal location of your business or a place where you regularly meet with customers or clients. Some exceptions to this rule include daycare and storage facilities. Let me give you a bonus here. So what is exclusive use? So the biggest roadblock in our view, and this is basically across the board, and a lot of experts have talked about this, the biggest roadblock to qualifying for this deductions is that you must use a portion of your home exclusively and regularly for your business. So the law is kind of clear though, and the IRS is really serious about the exclusive use requirements. Say you set aside a room in your home for a full-time business and you work in that room 10 hours a day, 7 days a week. If you let your children use the office to do their homework, you violate the exclusive use requirements and forfeit the chance for home office deductions. The exclusive use rule doesn't mean you are forbidden to make a personal phone call from the office. You have to rush outside whenever a family member needs a moment of your time. So although IRS auditors may be more or less strict on this point, some advisors say you will meet the spirit of the exclusive use test as long as personal activities invade the home office no more than they would be permitted in an office building. And the office can also be a section of a room, and you can show that personal activities are excluded from the business section. So what are we talking about when we talk about regular use? Well, there is no specific definition of what really constitutes regular use. Clearly, if you use an otherwise empty room only occasionally and its use is incidental to your business, you would fail this test. If you work in the home office a few hours or so each day, however, you might pass. So the test is really applied to the facts and circumstances of each case the IRS challenges. And so when we talk about principal place of business, what does that mean? Well, in addition to passing the exclusive and regular use tests, your home office must be either the principal location of that business or a place for regular customer or client meetings. If your home office is in a separate, unattached structure, let's say a detached garage converted into an office, for example, you don't have to meet the principal place of business or to deal with clients' tests. As long as you pass the exclusive and regular use tests, you can qualify for home business write-offs, not a problem, okay? So now what if your business just has one home office, but you do most of your work elsewhere? Well, it really depends. Remember, the requirement is that your home office is your principal place of business. I want to insist on that, not your principal workplace. As long as you use the home office to conduct your administrative or management chores and you don't make substantial use of any other fixed location to conduct those tests, you can pass the test, not a problem. And if you are an employee of another company but also have your own part-time business based in your home, you can pass this test even if you spend much more time at the office where you work as an employee. Okay, and so when we talk about business, what qualifies as a business? Well, as with the regular use test, whether your endeavors qualify as a business depends on the facts and circumstances. The more substantial the activities in terms of time and effort invested and income generated, the more likely you are to pass the test. Now let's talk about the child care or storage facility. Okay. Now the exclusive use test does not apply if you use part of your house to provide daycare services for children, older adults, or individuals with disabilities. So if you care for children in your home between 7 a.m. and 6 p.m. each day, for example, you can use that part of the house for personal activities the rest of the time and still claim business deductions. To qualify for the tax break, your home care business must meet any applicable state and local licensing requirements. So that's the first option here. And also you can store product samples or inventory you sell in your business. So assume your home-based business is the retail sale of home cleaning products and that you regularly use half of your basements to store inventory. Occasionally, using that part of the basement to store personal items will not cancel your home office deduction. To qualify for this exception, your home must be the principal location of your business. Okay, so how do you actually calculate the home office tax deduction? Well, your home office business deductions are based on either the percentage of your home used for the business or a simplified square footage calculation. That's what I said earlier, right? So the most exact way to calculate the business percentage of your house is to measure the square footage devoted to your home office as a percentage of the total area of your home. So this is really important. So you got to choose whether you want to go with the simplified square footage method or you want to go with the home office deduction. So it's really up to you whether you want to go with the direct method or the simplified method. It's all about what kind of resources you have, what kind of flexibility you're looking for also. Thank you so much for your attention. I really appreciate it. In today's conversation, I spoke to you about expenses that are tax deductible when working from home. So I gave you the overview, the pro tips, the steps, and the bonus. Thank you so much. God bless you. I'll see you next time. But until then, remember, stay marvelous.